inflation.
Recession.
Energy shock, a very large shock for the European economy, a very bad piece of news for Europe.
The European economy is in a pretty bad state, and now comes the next energy shock on top of the previous one.
Today we're going to talk about recession. Are we already in one? Is one coming?
Europe remains uniquely vulnerable to any potential recessionary situation, especially if what we're thinking is coming is actually a perfect storm. For one, European economies are more exposed to energy prices than, say, the US or China. And European governments have been trying to stave off the big, bad inflation for a while, but we've kind of moved into this stagflation era.
Well, right now, the economy in the US, where I'm sitting, is booming, essentially because of the AI investment boom and the AI implications for the rest of the economy, and because of a very expansionary fiscal policy that the government is expanding its spending in the middle of a boom. So it's kind of like adding fire to the fire, and those two things are keeping the economy on a strong footing. Both are kind of missing in action in Europe. That on the one hand, you have less of dynamism associated directly with AI investments. There might be some dynamism associated with AI absorption, adoption, adaptation, diffusion, and that might help the economy. But the energy shock is a very large shock for the European economy. The Economist today is coming out with a report with a headline saying you have yet to see more because the energy situation is much more fragile than the markets think. And so that's a very bad piece of news for Europe.
Very bad news for Europe. Guntram, what kind of vibes are you getting from the European side?
Yeah, I mean, the European economy is indeed in a pretty bad state. I mean, we have since the Russian invasion into Ukraine, we have a significant energy price shock and energy scarcity shock that was largely resolved in the last year, and now comes the next energy shock on top of the previous one. So the combination of these two successive energy shocks is a burden on the relatively energy-intensive industry, in particular in countries like Germany, which are very sort of cheap energy-based industry for a very long time. And so part of the story we are observing is actually a transformation of an economy away from relatively heavy industry, relatively energy-intensive industry, towards a different type of industry. And they are basically these two obstacles that the German and the European industry face. One is a major China shock, China really roaring ahead on major technologies that are now at the core of what typically the European economy industry was able to do, and at the same time the artificial intelligence shock.
I want to get into some of the headlines as well, because that's playing into the broader story here, right? So, Guntram, at the time of recording, there was a brief hit for Brent crude oil prices over $120 a barrel. And in the last 2 months, it's been really a roller coaster for oil prices. And then we had the exit at the beginning of May of the UAE from OPEC. How high could oil prices get?
Well, the main question for that, the main answer to that is it depends on how long the Strait of Hormuz will be closed. I mean, we are at the moment in a situation that for 2 months now, almost 2 months, the Strait of Hormuz has been closed, and that means roughly 20% of the global oil supply does not reach the final customers. And that, of course, means that prices go up, and prices have had the roller coaster because expectations about how long it would be closed changed depending on various tweets and statements by both the Iranians as well as the US president. And so I think at this point, the uncertainty has again gone up. That's why oil prices have gone up, and I think the many market participants now worry that this might remain closed for longer than foreseen. And so I think for me the question is, what can we do about it? And I think unless you think there's a military solution to it, which I don't think even the U.S. government thinks is feasible. We will have to find some sort of a compromise, and that's very unhappy. I'm saying this very unhappily because we don't want to make a deal with this Iranian regime, but then I prefer to do an ugly deal with the Iranian regime rather than keep having very high oil prices that benefit just Russia.
So let's say, we have a peace deal, we have an agreement of some sort. How long would it take the Strait of Hormuz is open again? How long would it take to, prices going back to normal? Is that like a couple of months situation, or does that happen quicker?
I would say that depends on two things. One is the damage already done to the infrastructure. There are apparently 2 trains of LNG in Qatar that were destroyed and will take between 3 and 5 years to repair. It depends on what's happening to the oil capacity, because now that the inventories are all full and they don't have where to put the oil, they have to start shutting down wells. And when you shut down wells, you damage wells. You lower the pressure on the wells. And so putting them back into production may take some time, and you need some equipment. And some countries, maybe Saudi and UAE, are more prepared for that because they've been shutting and opening as OPEC members. Iraq, probably less so, and Iran probably less so. So the idea is that, even if you opened it tomorrow, it's not obvious that all the insurance companies and all the ship companies are going to immediately say, okay, go ahead, use it, because they'll want others to test it first. And then we'll find out how much damage has been done. So I think that we're playing a game of chicken. The Iranians are trying to survive. So they're fighting for regime survival. Trump is fighting for, the next November elections, which are not existential for him, etc. So the question is, who chickens out first? And some people would say that when you have a predator-prey dynamic, one is running for their lives and the other one is running for their lunch, and that means that one has higher toleration for pain than the other. But we shall see.
I can't help but think about, when we're thinking about this energy shock, the last energy shock we had here in Europe, right? And it all has to do with fossil fuels. Guntram, why aren't governments doing everything in their power to ramp up renewables? Because, the sun doesn't always shine, but it shines everywhere, right? You're then not dependent on a pipeline or something like that.
Well, I think the first answer is many countries have invested a lot in renewables, and among them, China certainly stands out as the country that has really, really invested very strongly in renewables. Also, because it realizes that it is dependent on the fossil fuel from geopolitically difficult actors. And so China has really prioritized energy security based on renewables plus coal and nuclear, and coal is domestically produced. Now, this is a situation that we have not replicated in Europe. In Europe, the dependence on fossil fuels is still very big. At the same time, there has been an attempt to increase and build the renewables infrastructure, but it has basically happened too slowly to really compensate for that. But there are actually significant differences across European countries. So if you look, for example, at Spain, Spain has a much higher share of renewables in the electricity grid than Germany does, and has so far weathered this shock, this fossil fuel shock, much better than Germany, in the sense that electricity prices have increased much less in Spain than they have on average in Germany. And so in that sense, I would say yes, the structural long-term answer is a sensible and reasonable build-up of renewable energy and the entire energy systems behind it.
Rick, oil has also been the talks about the recession, but we've also I lived through like a couple of recessions now, like 2008. Even I'm young, but I've experienced recessions.
A lot of historical events in both of our lives.
So like 2008, of course, like COVID hit, that was a big hit. What are usually like the shock absorbers for stuff like this, for a recession? What can states or, European Union do to have like a safety net against a recession happening?
Well, I mean, the typical thing is that governments just stimulate the economy through fiscal spending, through lowering interest rates. The complication here is that it's happening in the context of what economists call a supply shock. Some of the inputs are in shorter supply and higher price, so that tends to generate inflation. And there's a bigger trade-off between containing inflation and stimulating the economy. But, there's this old line saying, don't let a good crisis go to waste. And I think that Europe has an important, serious strategic situation to deal with. I wish it wasn't the case, but it is what it is. I think Europe has to think that the security umbrella, the US security umbrella, is not as solid, as trustworthy as it thought. That security umbrella was built into many of the European institutions. For example, in the European Union, the acquis communautaire, the European common law or shared law, says that security is the responsibility of the states, of each 27 of the members. And if you were to design the European Union from scratch, it would be a military union. But right now you have 27 armies, 27 procurement processes, 27 everything. And then, Germany is now independently, accelerating its build-up. Poland is, strong in its build-up, etc. Each one with its own kind of separate army. That makes it, in part of the investments are there to substitute for the U.S., not to complement the U.S. So it's not making the old NATO alliance necessarily stronger. It's just, you're replicating capabilities that the U.S. Already had. So if you see that, it means that it will take Germany maybe 10 years to become a really strong military power. If you're sitting in Moscow, you say, should I wait 10 years to take the Baltics, or should I take them now? So I think that Europe is in a very serious strategic situation. So maybe if you need to have some fiscal space to do more to stimulate the economy, you might use that space to consolidate the security of Europe, right? And to advance a little bit in the Union. We were talking about, Guntram was talking before about the fact that in Spain, they use more renewable energy than in Germany. And Germany could buy energy from Spain, but they have to get through France, and France doesn't open up its electricity market. So it's, again, a problem of insufficient integration within Europe, that maybe we can use this crisis to make progress in making Europe a more viable, a more sustainable, a more vibrant place.
I was really happy to see, Ricardo, that you are a true European federalist, just as I am, and really arguing the case for a European army, which, by the way, at the foundation of the European Union, was a big part of the conversation and was stopped in the end in the French Parliament. And Konrad Adenauer at the time was saying, "This is the worst day of my political life," because he realized that this is, of course, a huge a blow to European integration, and exactly that's the kind of thing we need.
I want to bring in a comment that we actually got recently from one of our faithful listeners, Paige, and this was received via email at thedip@dw.com. She had a lot of really good things to say, but I want to bring part of this specifically to you, Kai. And she wrote, because this was about our story about how the US and Germany specifically compare in terms of technology and innovation and that kind of a thing. And she wrote, instead of trying to copy and paste the US economic model, I would argue Germany should take lessons on the US business culture that makes the market so successful instead of creating products like the European Zoom, as discussed on your podcast. In these times of economic uncertainty, which we've discussed a lot in this episode, German businesses should shift more towards a hiring and promotional model that rewards new ideas in order to encourage innovation.
Yeah, I guess Germany's always a bit slower to move in general, I say. But I guess if you would like tell anybody from Siemens or so, show them this comment, they would be, yeah, that's us. We're doing this. We're innovative. We're flexible. We're investing. We're doing all of these things. Yeah, it's really, for me, it's really tough to say because I always also feel like that companies here struggle a lot and do a lot and try to work with the, political frameworks that they are given, and they just need to accustom to so many norms that Germans like. But, so that's also something that maybe as Germany could cut down a bit, not just, our business mindset, but the red tape around it, basically.
I think that that was such a cultural shock to me coming here, because I think coming from the US, right, there was this idea that Germany really has its beep together, right? That things run on time, and that a German product has a certain standard that levels up to. But then just you get here and just really basic parts of living, much less when you're running multi-million, multi-billion-dollar companies. The hoops you have to jump through sometimes can be really wild, I have to say, as someone who has come here recently. So these companies, these big companies, they really do, they turn the ship quite slowly when it comes to addressing innovation, at least from my vantage point.
Yeah, totally agree. Totally. Hi YouTube, this has been a sneak preview of our podcast, The Dip.
And if you like what you saw, you can of course check out more episodes in our playlist.
Or you can check the description link in the description, of course, or you can scan the QR code that's somewhere around here to listen to the podcast wherever you listen to podcasts usually.
But until next time, thanks so much for checking out The Dip.